Yeah, Steve, expectations were very high. We've had a very good run up in the share price year to date. And there is little appetite in the market right now for a slight miss in terms of the earnings versus consensus, I should say. Because let's be straight here. We had a very strong quarter, very pleased with our EBITDA margin of 15.7%, more than 500 basis points up from the year ago, if you correct for the divestment of our quads business, which was a positive gain of 62 million in the prior year.
Yeah, do you know what? I'll go with you on this one, Conrad. Just on the share price. And I know that CEOs are always absolutely rightly cagey on talking about the share price. But there is something going on here. We see it not just in your company, but across Europe. The volatility and perhaps lack of liquidity in the share trading very often is leading to more violent moves. Is that something you've noticed? The sensitivity to what you're reporting, has it gone up in recent quarters?
Well, in our case, I think it is all about expectations. Like I said, we had a very strong run-up in the share price year to date, plus roughly 19%, clearly outperforming MSCI Chemicals Europe, as well as MSCI Chemicals Global. So when expectations are high, when consensus is actually above our guidance, then I think there's little tolerance on any movements here. But we have a long-term focus. We are actually well on track to deliver the numbers this year. We increased our guidance from 15% EBITDA margin to 16% EBITDA margins. And actually, we also confirmed the outlook for next year, where we're targeting a 3 to 5% top line growth and a further improvement in profitability from 17 to 18%.
Yeah, I guess they're also picking up on, look, you're absolutely right. You're saying 2024, meaningful step forwards in your medium-term targets. But this line I thought was interesting that comes just above that. We expect no signs of a broad market recovery in the second half of the year. That's quite damning, Conrad.
Yeah, I wouldn't call it damning. I think a lot of what we're doing here is self-help. So if you take a broader view at the industry, some peers have actually guided for a weaker second half, because what they saw in the first half is restocking, which is not reoccurring in the second half. What we're seeing in Clariant is actually a slightly stronger second half because of the full year inclusion of our Lucas Meyer acquisition, but also because of a continued strength in our care chemicals and in our additives business. We actually did achieve 7% volume growth in our care chemical business in the second quarter. We achieved 5% volume growth in additives and adsorbents. That is clearly strong organic growth, which is well above the market, and we expect that to continue.